My name is Jared Meyer, and I work for NinjaTrader in our Denver office. We have a very special event with you today with Max Rybinski of Central Trading Academy. It is important to understand there are substantial risks in trading commodities, futures, contracts, and Forex. Excuse me. You should carefully consider whether such trading is suitable for you, and that will depend on your specific circumstances and financial resources. It is possible to lose all the funds deposited with your broker, and you can even incur losses beyond these amounts. You can inquire, at ninjatradecosystem.com/risk-disclosure for more information or for a copy of the CFTC full risk disclosure. Also, please remember that these training webinars are not a solicitation or recommendation, but simply educational in nature. Also, this presentation is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to NinjaTrader Brokerage directly at area code 312-262-1289 or by emailing brokerage@ninjatrader.com. We are very excited for this unique event in which Max Rybinski presents a simple approach to trading. Thanks again for your attendance today. Without further ado, it's my pleasure to welcome to the NinjaTrader webinar room Max Rybinski. Please take it away, Max.
Thank you, Jared, for the lovely introduction. Hi, everyone. We're just going to have a good night tonight. We're going to talk about basic trading strategies. I know that there are some people now that have no experience and some that have a lot of experience. So we're going to touch upon some of the major fundamentals, and then we're also going to move on for some more advanced understanding of how to analyze the market, use some of the actual signals to your advantage. If you type any questions during the presentation, I'll just try my very best to address it at the very end. If I miss you, I'm sorry about that, but we'll be able to see it again. Just retype it and I'll try to address it as we go. All right, let me see if I can get this started. Here we go. Basics, terminology, trading foundations, charting, and exercises. We're going to try to put into practice what we're going to be learning today. So I want to get through these slides as fast as possible so that we can actually do some trading. So let's see what we're going to be put up. When you are trading, there's so many systems out there. There's so many indicators and people trying to sell you strategies. Whatever strategy you come up with, as long as it is working for you, don't change it. I know some traders that trade based on weather patterns. There's a guy who believes based on planetary movements. It really doesn't matter what you trade as long as you're consistently profitable, using good risk management, and having fun while you're doing it. Okay, what is trading? For those of you that don't really understand what trading is, it's very simple. You're basically taking one good and services and trying to exchange it for another good and services or monetary gain. That's it. It's very simple. You have to understand which direction you're getting. Now, what you need to be a trader, you basically need to be able to have some data, a platform. NinjaTrader is awesome. And basically what you need to do is educate yourself in figuring out why you've chosen direction, what helps you gain the confidence to take a trade in that direction, what makes you feel that a symbol is going to either increase or decrease in value. And you're going to need a broker. All right. Trading tools. I put this slide in. I'm not getting paid for this. NinjaTrader really is awesome. Let me tell you why. I've worked with Reuters, Bloomberg. I've gotten the chance to use Sterling systems. If some of you guys have actually heard of like Pete Pro 8, the direct market access platforms, there are so many out there. Sierra charts, whatever you can think of. It's extremely important to know your trading tools. As a trader, you have to know the pros and cons of everything you're using and really find something that fits you best. So I've chosen NinjaTrader. NT8 is just phenomenal because you'll get a chance to actually use a little bit more in-depth of the data. You can create your own tools, as well as the multi-threading has really helped that out as well. Terminology. When you're going to be in an office or when you're going to be trading and listening to some people talk about trading as well as working with other traders, you're going to hear buy, call, long, and bid. All this simply means is the value of whatever you're looking at is supposed to be going up. If you ever hear terms like sell, put, ask, short, basically the price is going to decrease. So if you're going to hear me today build a strategy, I'm going to say I'm going to take a long here. That means I'm actually trying to buy in hope that the market will go up. If you hear me say I'm taking a short, that basically means I'm putting on a sell position. Types of analysis. This is always fun. There's technical and fundamental, and usually both bodies don't like to get along with each other. I don't really understand why. But basically, let's go through it. Fundamental analysis is usually what you hear in the news. A lot of the CNN Business or Bloomberg TV, you'll hear them talking about economic announcements. These are extremely important to know. So it's a massive amount of information to process, but once you find something that works for you, you can use it to your advantage. I know a lot of traders that really like Wednesday at 10:30. Today we had some amazing announcements come out with core retail sales. These types of information can help you if you're going to be taking trades based on some fundamental cues that will also tie in with whatever you see on your chart. So fundamental focuses on economic forces. They really focus on the cause. What was the actual cause of a particular event? And they try to forecast what will occur after the economic announcement has been released. Now, technical analysis, I'm not going to get to number 4 yet. Technical analysis is a little bit different. They focus on the current market condition as well as the past market condition. They look at the effect of an announcement, and they try to focus on the timing as well as forecasting. They do a little bit more, and then they focus on the price as well. Now, both fundamental and technical analysis focuses on price. They have that main common element, but actually you can build a good strategy and you can really work on your analysis if you use both types of analysis. And right now everyone's talking about machine learning, quants, quantitative analysis, some sort of hybrids, but really there's only a tie-off. It's only 2 bodies of analysis. It's technical and fundamental. And then of course blends have come out of this now and they're calling it quant and everything else. But really if you want to develop a good strategy, you have to use both. So study up on some of that. And there's so many free tools you can use to find your fundamental analysis. All right, let's move on to the next screen. Trading chart. What is a trading chart? You have an X and Y axis. The bottom is time, and the new candles are developing on the right side of the chart. Price is the y-axis, it's up and down, it's the vertical. If it's going up, obviously the price is increasing, down, opposite. Trading charts. Doesn't matter what you're using as long as it's comfortable enough for you to find out what actually works best with your style of trading. Line chart is really good just to quickly look at something to find out what direction it's going. You have volume, minute, daily, range, and tick. We'll go over that, but today we're going to focus a little bit more on a candlestick because that's very popular. So this is what a line trick looks like. It's very quick. It just tells you the close prices from one point to another, and then a line is drawn in between. When you look at it, it should help you understand what direction of the market is moving very quickly. A range chart, each one moves a specific amount of ticks depending on whatever your points or whatever your actual setting is. So the chart doesn't actually care about time, but it does make a more uniform movement so you can see reversals a little bit easier. A tick chart, every bar has a certain amount of ticks that you've distinguished. Like NinjaTrader lets you use even 1 tick, but you can fill it a bar full of like 100 ticks, 1,000 ticks. It depends on what kind of a time frame you're looking for, but each bar represents a certain setting. All right. Volume, same case. And a minute chart is one of the most popular used by traders. You can make it to 1 minute, 60 minute. And also if you're looking for a full day range, instead of using a daily bar, you can use 1,440 minutes. It's a little bit more accurate instead of just getting the day information in a daily chart when you select it in NinjaTrader. All right, how to read a chart. Basically what you're trying to do is you're trying to use the information that's displayed graphically in front of you to determine if the market is moving up or down, looking for cues for you to determine where it's more accurate to minimize your drawdowns, and we're going to try to see if we can do that together. A candlestick is broken down in an anatomy. I had to use white and black candles. When I first came to Hong Kong, I realized that red here is actually positive, so they're actually looking at the chart instead of coming from Toronto when you have a green bar. it means the market is going up. So for this presentation, I keep everything rather simple here. It's just white and black. So basically, if you have a white candlestick, the actual open is at the bottom of the box, the close is at the top. But during this session, if you had a low at any time when it did open, you'll have a lower extension. Before the close, if it was higher, you'll have an upper extension before it closes, but you'll have that information there. So it's really neatly designed for you, so you have everything you need when you look at a candle to determine what happened during that session. Now, candle can represent 5 minutes or 1 hour or whatever setting you want. Now, on the opposite side, when the market is moving down, when the candle is negative, the actual open is at the top. If at any time it did move higher than the open, that would generate an upper extension. If it did move lower before the close, then that would generate a lower extension. So, no questions yet. I'm going to breeze through this really quick. Everyone here seems to be professional. All right. Trends. What is a trend? This is a great question because so many people have different views on what they believe is a trend. If you ever take a Series 7 or you look for a CTA certificate, a trend is defined by 2 points, not 5 points or 10 points. I had a guy say confidently it has to be at least 30 points, and it's not true. A trend simply is 2 consecutive higher highs and higher lows. That is an uptrend. And I'll show you what that looks in a minute. A downtrend has 2 consecutive lower lows and lower highs. Now, I like trading trends, but I'm also very particular where I enter into my trend, and I'll show you how I do that. I always try to look to enter for higher lows if I'm going to be taking a long, and lower highs if I'm going to be taking a short. This really helps me minimize my drawdown. Developing trends. So here's that trend chart. Now, I did mention that if you use something like a price chart, things like range or Renko, you'll have more defined reversals. And this is a Renko chart. So we're going to take a look at it. And what I'm trying to do is identify 2 consecutive lower highs so that I can determine if it's a downtrend, and 2 consecutive higher lows if it is an uptrend. Now, the reason why I say 2 consecutive is because that's the actual definition when you do study. But it actually does help you minimize and confirm that you're in an uptrend. So why not use it? Makes it a little bit more clear to see as well on a range chart. So it is somewhat like cheating, because if you do look at a time chart, sometimes you have this lull of information that is just moving sideways, and it's much easier to use a higher low. That is true. We don't need any other tools. Basically, what I'm trying to establish is that when you are looking at trades, first make sure that you analyze the information in front of you. Any type of additional indicators are really giving the trader confidence to make their decision. So if you can analyze the information on your chart, once you start adding indicators, harmoniously they'll work together to give you more confidence to enter your trade. So first, understand the information, then add more to it to give you whatever edge you need. All right, good question, Andre. Support and resistance. This is very important as well. So when you look at a chart, there's usually this magical floor and ceiling. That's the easiest way to explain it. So a price will start moving between a channel. And if that's usually the first thing you learn when you're looking at trading, any type of trading material, they usually say focus on understanding where is the floor and the ceiling of this particular movement. And they're never made equally. So let's take a quick look. Basically, a channel can be rising, could be falling, could be flat, could be broadening or narrowing, and they all help give a little bit of information to the trader. So in this case, we have a rising channel, and the support line is witnessing at the very bottom. Depending on how you draw your chart line, I've seen traders draw it very narrow, they're very aggressive, they're looking for the retracements. I tend to draw a little bit further them out, so I'm a little bit more cautious of a trader. That's how you know what kind of a trader you are, where you're actually drawing your support and resistance. Now, it might take some practice. I have come across a lot of traders over the years, and some of them they cannot draw a support and resistance channel. They focus so closely and narrowly on the information that's being developed that they fail to look at the big picture. And a support and resistance channel is really going to give you a hand. Yes. Indicators are something that gives the trader confidence to enter the trade. You have to analyze the market first and then add more information with indicators so that you can make better decisions. That is correct. So when I'm looking at this particular chart, we see a rising channel, and traders basically look for retracements at the bottom of the channel. Now they also happen to be higher lows, and that gives you a little bit more confidence to enter into your trade because it also validates the trend. So put together everything that you're learning so that you can make better decisions. All right, next, falling channels. Same thing. Instead of a rising channel, now we're having a falling channel. This is what one would look like. So you're drawing the ceiling and the floor of this particular band. And it's very simple. Just push F2 on your keyboard when you're in the NinjaTrader chart, and you're able to draw these lines very easily. We'll get to that soon, Ken. This is my personal trading chart. None of these indicators I don't sell. This is just something, the information I'm trying to share. But don't focus on the indicators. Focus on the actual channels. You might be really experienced, so I'll breeze past this a little bit. But for those who haven't actually had this experience, I really want to focus on the importance of understanding trends, lower lows, lower highs, as well as understanding how to draw channels. Support and resistance is like the basic foundation of looking at the chart. Even the fundamentalists, they're going to be saying, oh, the price is moving above the 200 average and we're reaching a support level or resistance level. They already know that this is something this is the basic fundamentals of analyzing price patterns. So you have to be able to do that confidently. Don't worry if you don't see it at first. It will take time. The more hours you put into this, the better it gets, the better and easier it gets. All right, so let's talk about it a little bit more. Narrowing channels. And you hear these breakout terms, and that's basically what happens in a narrowing channel. You're trying to see when the price violates it. So in a narrowing channel, usually you have a price that can break upwards if you're having a narrowing channel just after a previous uptrend. So traders like to observe the price information reacting to the narrowing channel. Traders may wait for the price to react for a breakout. And that basically means when it violates support or resistance. If it violates the resistance, it's breaking upwards. So you're looking for that break to happen, consistent, maybe wait for that pullback before you join the trend. Broadening channel. Now this is a really weird broadening channel because typically a broadening channel is either flat or slightly downwards. This one is actually up. But when you're in a broadening channel, you have more energy to actually move to the upside. A lot of traders favor a channel break on the bottom. So basically all that simply means is the channel looks like an ice cream cone. It's opening out the mouth. It's not closing, it's opening. So you're consistently drawing your support lines and you're looking to see how the price is reacting between it. That's all. So keep in mind everything that we're talking about right now. So you've been learning about higher lows, lower highs. So in this particular case, a broadening channel is more favorable if you can find lower highs so that you can look for entries on the downside. All right, violation of support. Now this is exactly what we were talking about. Once you have a violation of a support or let's say resistance, then it becomes the opposite. So now let's say that you have a violation of the previous support line where I identified it with that arrow. Once it breaks through, if it starts to respect that particular point, it now becomes your resistance. So you have to wait for the price to develop a little bit to find out where your support line would be. And now you can continue to see if you can trade between those bounces between the lines. Entry and exits. So every good strategy has a predefined entry and a predefined exit. Now the way I like to work with traders and work with myself on my own strategies is entries require stacking. That means it requires a lot of information to work together before I enter a trade. So I'm very cautious. Some traders are not. They see a simple queue, they get in, they take a lot of trades, and it works for them. If it works for you, just keep it. If not, and you want to try something a little bit different, try looking at giving yourself many different excuses to get in. And they all have to agree. And then very little excuse to get out. So stacking your entries, layering your exits. How does that look? Candlestick formation is a little bit more advanced. I don't want to go over that, but I'm pretty sure that if you have been trading, you've probably read a few books about dojis and haramis and shooting stars. That's fine if you're using it. You can use that as a confirmation for your entry. That when you're entering because you see a hammer or you see a shooting star or some sort of a candlestick formation, but it also has to work with a directional candle. What is a directional candle? Simply means that the candle is now in position of your entry. That means if you want to take a long, the directional candle means it's green or it's positive. If you're in Hong Kong, it's red. So basically, I live in Hong Kong. It's 5:30 a.m. in the morning, and I'm talking about trading. I love this stuff. So if you have any questions, you're always welcome to just drop some here. It's been a little bit quiet in the chat room there. So basically, when you're entering, all of these have to be working together. You have to have a candlestick formation. You need to have the right directional candle. Let's say you're using an indicator like moving averages, 2 of them, faster and faster. Then you have to have a positive cross. And a Fibonacci level. If any of you guys are using Fibonacci levels, it should be at the 786 or 618. And then once you see all these line up, you get a lot of confidence to get in. Now what about the exit? The exit, you only need one. Let's say this is how I trade. It may not be the same for you, but let's say that you reach your stop limit. It hit your level where you don't want to lose any more money, just get out. Let's say it hits your target limit. You're happy, you get out. Your time limit, it's hovering slightly positive or slightly negative for way too long. It's outside of its average behavioral range, so you cut your trade. Or it reaches a different candlestick formation, or a different directional candle is formed, or an opposite moving average cross, or a Fibonacci. The cue that I'm trying to give you is or. When you're talking about entries, it should be candlestick formation and directional candle, and you layer them, you stack them on top of each other, so it gives you all the confidence you need to determine that this is your cue to get in. But when you want to get out, you want to make it very easy. You want to protect your profits as much as possible. I like to use break-evens. ATM function in NinjaTrader really helps me with that because I can protect myself. Once it reaches a certain profit, it moves my stop to break-even. So there's so many different ways that I protect my profits because the biggest challenge in trading is capital preservation. You want to think about keeping your profits as much as possible. All right, next slide. Building an algorithm. Finally, we get to have some fun. All right, so what did we talk about before we get it in? We mentioned the importance of understanding the basics of trading. Understand what trading is, have the information easily displayed, look for simple things like what is a trend? That's 2 consecutive higher lows or lower highs, and also making sure that you're looking at support and resistance. Now we start adding some more information to it. The idea though is keep it simple. So don't overcomplicate it. I like to use one oscillator. It tells me about the speed of price change, and I like to use either some sort of a moving average or maybe a band. So that's all I like to do. But my first priority is, am I entering at a lower high or higher low? What is the actual trend? This is something that really comes first. Where am I in support and resistance? How's the price reacting to these things? Right now, it's very popular to use volume profile and order flows. If you know how to use that, I've researched it. It's not easy. Well, for me. And it works for you. Keep using it. It was an example, Ken. You actually have so many different numbers for Fibonacci. I got a chance to be mentored with some people that really care about Fibonacci and how they apply it to using in price patterns such as Gartley's, butterflies, bat, and 786 or 318 or 618. All of these have different ways that they inform a trader. You have to find what works well for you in whatever price pattern you're using. Like for instance, 318 or 382. This would be something that traders typically use as a continuation level. So retraced only 382 or 318, and then all of a sudden it should continue the trend. Or if they look for an entry at 786, they're more interested in looking at reversals. Yep. So what I'm trying to say is you can use whatever you want to help you either stack for your entry which is a good thing to do. And then also, if it reaches a specific level, it might be a very easy reason for you to get out of a trade. So just keeping in mind that whatever works for you, whatever levels that are important to you, as long as you've tested them, they're profitable for you, go for it. All right, back to building an algorithm. So when we're actually looking at trading foundations, remember keeping to your basics. So now we can start adding some things to our information here. So this is max bands. This is mine. You can use a Keltner channel. You can use Bollinger Bands, whatever you want. But this one is being special for me, and it makes things easy for me. So when I see that the price is moving below the center line, I'm looking for shorts. If it's moving above the center line, I'm looking for longs. And how it reacts to the band gives me information on when I should be looking for my exits. So I start with something very basic like a center line, a moving average. Is the price going above or below? And a moving average is nothing special. It just basically means it's calculated with a few different points back in reference to the current price. So let's say you have a moving average of 10. Takes the average of the last 10 prices, plots a dot, and then continues to do that with every new dot. And then you see what is the current price in average of the last 10 price averages. So if you're moving below it, well, you're under the average. If you're moving above it, you're above the average. So to me, that's the way I use it. I look for, well, the price is being really strong right now. It's going outside its average norm. Therefore, I believe I'm in an uptrend. I'll be looking for something for longs. If it's below, I'm looking for shorts. I like to keep it very simple. And then I add an oscillator. An oscillator is great. You can use anything, such as RSI is very popular, stochastics. This is my own. Yes, it does. And what this particularly is a moving average momentum oscillator. And what that does for me is it tells me the speed of price change. So if it's moving confidently to the upside, I know that the price is more aggressively moving up. If it's moving below together, then I know that the price is moving more aggressively to the downside. So I'm looking for cues for opportunities to take shorts when I see that. That's all. I'm trying to keep it as simple as possible. Now, once you add them both together, this is what you get. So if I have to create rules around it, I want to look for lower highs on a downtrend, that are the second lower highs, that are also in a negative oscillator position and are below the moving average. And I want to do the opposite when I want to be on the upside. Now, I'm looking for higher lows above the moving average and a positive oscillator speed. And those are my signals. And I get to now use my own discretion by drawing on the chart and say, where am I in the support and resistance? And where am I in the actual price movement? So is it actually a second lower high or a second higher low for me to feel comfortable in entering? That's all. Very simple. And here's the best thing about strategies. Once you create one, it means absolutely nothing unless you've back-tested it and confirmed that it does give you the right information for you to become more accurate in your trading results. So keep it simple, backtest, and then the hard part is see if you can execute it. Because not all the trades that not all the strategies that you're going to be actually creating, they might be great for developing and backtesting, but then when it comes to actually live production, it's going to fall flat. So keep to something simple, make it usable in real life, choose something that makes sense to you, and then be able to practice it enough for you to start being profitable. All right, trading in the zone. I always hate this part because everyone always talks about the importance of psychology and all this other stuff that they tell you, and it's true. You really do need to keep yourself healthy and keep yourself strong, but it's just such a nuisance to hear because it's obvious, but we somehow still ignore it all the time. So I am going to touch upon this before we start doing some live exercises. Some important things that you need to know. I've broken it down to some very simple points. Dangerous traders, what their behaviors are, how to stay in state, and creating a purpose. What do those bars represent in your last slide? The bars are Unirenko bars. I like to use Renko bars. Be careful when you use Unirenko bars because it has an artificial open. You have to be very careful. It's really good to look at reversals and price movements, but you might want to stick to, let's say, better Renko or a Renko chart or line break. Even line break is artificial open. But you have to be very careful. It helps you identify reversal points, but they have artificial opens, so it makes it difficult for more testing. All right, let's get back to the psychology part. We're almost done, and we'll have some fun. The blue and pink lines were telling you, okay, Gene, I'll go back right now. Let me quickly go over this before I move on. The blue and pink lines, what these lines are, all they simply identify, yes, I perform with real, you have a tick replay option in NinjaTrader to see if you have more accurate results when you're testing. I use it as confirmation, but I try to trade on a tick chart. Okay, these red lines simply identify where my signal would have generated because we developed this strategy together. We used a band, we used an oscillator, and we did this just now. So these are the areas that are signals that have aligned with the rules of a strategy that we created. The vertical lines, yep, these lines right here. I drew them just to highlight where those entry signals would have been. All right, let's move on quickly to psychology, and then we can get started with some charts. Here we go, trader regret. This happens to a lot of traders, and it can really hurt you. I've seen a lot of new guys do this. When you started trading, let's say 15, 20 years ago, you see a lot of older guys. They're more disciplined. They have a real trading strategy. Now the game has really changed. You have all these young guys, and they're very aggressive. And once you hit 30, you're like old in the office. But this is one of the most common traits that I see with these young traders is trader regret. They miss their entry signal. All of a sudden, you get a signal and you try to jump in, you didn't get your fill, maybe you're using limit order, I don't know, and then all of a sudden you have this massive amount of regret. So what do? The movement is happening, you want to take part of it, and you jump in late, you get a poor price, and now you're getting slammed by the market because it's reversing on you, you're getting rolled over. Don't do that. The best thing you can understand about trading is it is very cyclical. Signals will come continuously. It is opportunistic. You just have to be patient and wait. So as I got older, I realized I made less of these stupid mistakes because I was more patient, and I understand this, that once a trade happens, if I didn't get it now, that's okay. I know what my probability is. I know what my average is. I just wait for the next signal, and I get in. If I don't get my price, it doesn't bother me. I just wait. But don't make this mistake, because if you do experience trader regret, if you get regretful when you're starting to take a shot and you didn't get part of it, it will hurt you if you start getting bad prices. So just don't do it. All right, next one is trader anxiety. Okay, this is something that also happens to young traders, especially if you're starting out. You have to accept where you put your stop, and you have to accept where you put your target. Once you get in, and as soon as the price moves for you and then goes against you, you start getting really nervous. Your emotions are out of whack, and then all of a sudden you're feeling this sense of anxiety, and then all of a sudden you don't truly let it go to your target, or you don't let it go to your stop. Instead, you just cut the position either slightly against you or slightly for you, and there's nothing you can do. And that's the worst style of trading. You have to accept the fact that your strategy is going to be right or wrong. You already know your probabilities, so just stick to your plan. So make sure that you keep your defined losses intact, as well as understanding what your trading plan is for your determined targets. And the last but not least, my favorite, but also the saddest part of trading, the delusional trader. And this happens. Don't let it happen to you. Basically what happens is you're in a trading office, you're about to take your trade, you grab your position, and then it starts moving against you. Then you start to justify why you should move your stop loss. And every time you move your stop loss, it starts getting worse. Don't do it. All of a sudden, you're rationalizing, determining why you're right. You have to accept that you will be wrong a lot of times in the trading game. Just admit it, take your lumps, wait for the next trade. It'll hopefully be better. Done. Again, stick to your defined stop losses, never move them. Do your very best not to move them. And then also just make sure that you have your strategy that's being tested, because if it has been properly tested in different environments, you don't know how it's going to react. And if you are going to start to make yourself come up with new excuses why you should give yourself a larger stop, get out. Revisit your strategy, backtest, find out what was going on, and then get back into the market. But whatever you do, delusional traders can end up really hurt in so many different ways. So just don't do it. All right. What else is there? Staying in state. This is usually important. So we talked about this. How to have a good trading day is manage your emotions. Having a strategy really does help you with that. Have an outcome. What do you want with trading? Treat it like a business plan. If I'm going to be a trader, how long will it take for me to educate myself? How long will it take for me to get good at what I'm doing? And verify your results. Money management. Remember, we talked about capital preservation, and have a life outside of trading. So I love trading. This is my life. But I also have a family, so I want to stay myself balanced. I want to have something to do as well as trading. So making sure that you have a good social life, keep yourself active. Traders can sometimes trade on their own, become very lonely. Just make sure you're part of a good community. And NinjaTrader really does give you a good ecosystem. They have tons of communities that you can be part of to really help you if this is something that you really are going to commit to. All right, knowing your purpose. More of us will do more for others than we do for ourselves. This is absolutely true. If you're trading just because of the money, it's going to be weak. But if you're there because you want to help yourself, your family, and other people as well, you got to give yourself a really strong purpose. A purpose, whatever it is, has to be yours. But if it's going to be because you want to have a great vacation with someone or whatever it is, make sure that it's a very strong, long-lasting purpose so that it will push you on the days that are going to be really hard, and also really motivate you and be even more celebratory when you have those great days. So having a good purpose is really going to help you be a better trader too. All right, live session. Finally, we get to good stuff. Screen sharing. I'm just going to jump right into it right away. Here's my screen. This is the NQ. This is a very popular tool that's in right now. Everyone likes to look at volume profiles. So if you hit F2 on your NinjaTrader platform, you'll be able to draw some lines. This is a volume profile. How to use it. You're basically looking for clusters. It's rather common sense. So you see these swells of volume. Basically means that traders over here are respecting this particular price and they're using it in a specific way. So they might be looking for selling opportunities. And then you have this vacuum of space here before you have another cluster. Price should move more quickly, and it does. Look at that. It moves more quickly between those vacuum areas, and then also slows down because you have more sellers here, and that's why you have this swell. You can use this. Me? No, I'm not interested. I got my oscillator and I got my bands, and this is something that if you're really interested in using, you really have to spend a little bit of extra time on. All right, so let's look at my chart. Here we go. This is my chart. And what I'm looking for is rather simple. I'm looking for price speed. So I noticed that we are in a downward channel. Right now it looks like it's violating that support and resistance. So what we first do is draw your support and resistance. Try to see where the price is actually acting more predictably. So we see now that it broke out of this channel, right? It was moving downwards and now it's moving up. So all of a sudden it looks like we might have long opportunities. However, I don't see what I want to see here because it should be moving upwards. Now I'm trading in sim. I did mention that you have an opportunity here to really adjust and help create parameters to make sure that you minimize your risk. This is something called ATM strategy. Take some time to review it. I have a few settings that help me. I'm looking for that higher low, and there's a lower low being made right now. I want to make sure that it's moving upwards before I take a long shot here. And I can see that my oscillator is growing. Now, I did talk about the importance of whatever works for you, especially if you're the type of a person that likes to use volume profile, but there is something that I like using a little bit better. It's actually called a dynamic volume profile. It is made by Wait for Trade. So it tells you where some of those volume clusters are in real time. So I can see that right now the price is holding above that volume cluster. It broke above it, so I feel more confident if I start getting a long signal here. I'd like ideally to see a higher low. So we have a higher low here. Hopefully we'll get a higher low here. And then once it does, I might be able to demonstrate how I enter a long. Now this is the best part. When you are using NinjaTrader, you can do buy market. You can also do a limit market orders. And once you do that, the ATM strategy, if you set it up the way I set it up, you can immediately have your target identified as well as your stop. And that really helps alleviate the pressure with having to worry about your risk management. All right, and also NinjaTrader is awesome because you can actually program in C#. So I have my own tools here that if I feel confident, I can just let my algorithm to try to get in on its own, and all I can do is just manage it. So enter on a market order, it break evens at 12, and I just wait and flat it once it reaches a specific level if I want to get out soon. All right, I am reaching that time where I just noticed it's now 6 a.m., which means do I have any more time left? I should be looking for any type of questions. If you have anything, I can try my very best to answer. Let's see if this will give us a little bit of a long entry here while we try to do a bit of a Q&A session. So if there's any information you guys want to ask me, or sorry, any questions you have or information you want me to further clarify, go ahead now, put it into the screen. I'll do my very best to answer it. Yes, I do. Central Trading Academy. Can I have the replay? Oh, replay is amazing. Okay, let me just quickly give you the website, www.centraltradingacademy.com. I'm in Hong Kong. I do a lot of free work with universities as well as I host meetups, and I try my very best to work with the community because I work with traders already and family funds. So it's much easier if you are in this part of the world, but I do have a team that I do work with, so hopefully they'll be able to give you a hand. Am I on YouTube? No, I actually do try my very best to keep myself quiet. NinjaTrader is the only platform and people that I like to work with. So this is my first event. Hopefully I'll find the time to do some more, but I don't have much things on YouTube, sorry. I'm thinking about what I've heard. Very intense webinar style. I hope it wasn't too intense. I'm trying to cram in some really good things in a very short period of time. Do I have videos on my website? I have a few videos on my website that are pertain to some of the indicators, but no, not very much. I will be coming out with some video tutorials on trading. Look at that. We're getting a little bit of a higher low confirmation from the previous one. It's a little weak, but we can probably steal a tick. I just don't want to take that risk. 1, 2, what am I going to do here? Let's do a demonstration since we are. Okay, so I just used my ATM on a limit order entry. So that's what it should look like. It automatically entered my position once I got my price, and it gave me a stop and a defined target. I love this thing. Now I can still control it. I can bring it up or down if I want, but then also I can close it, and this is the best part of using this particular platform. I highly recommend if you are starting out as a trader, please read up on your ATM strategy. NinjaTrader has some good tutorials on how to use it. This thing will really help you out. Any other questions, guys? Yes. When you choose your account, you can choose your IB account, whatever license that you have, and then underneath there's another selection called ATM strategy. Now when you select your ATM strategy, usually it says custom. Click on that, follow the instructions. You can set your stop, automatic stop and targets the moment that your price level gets filled. What is my stop and target? Usually I give myself about 15 ticks, try to capture 25 ticks. Depends what I'm trading. If you're trading bonds, it doesn't move that much. This is NQ. So I have different setups for different styles and different markets. You can also use this for Forex. So again, it changes with whatever you're trading. Don't let anybody tell you that you have to have a 1-to-3 ratio. That's a different style of trading. In real life trading, when you are trading, a 1-to-1 doesn't really always have to work, or a 1-to-3. It is very dynamic. You won't have the same stop for the same instrument. You can have it adjusted. It could be trailing. Whatever works for you, it's going to take some practice. That's why I'm saying that when somebody tells you it's a 1 to 3, I usually like to claim that, oh, there we go, we got my stop. So this is one way to actually use it. It'll protect you as well, so you're ATM trailing. Everything in your platform that you're showing, standard functions in NinjaTrader. No, I was just saying that. There isn't any standard functions on NinjaTrader. They have tons that you can use. The best website I think you should go to is, they have an ecosystem sharing site that you can find some really custom tools, indicators, people share strategies, use them, define them, and then also these are being customized. Guys, this has been a great event. Thank you to NinjaTrader. Yeah, 1 to 2 or 3 ratio, whatever works for you, Ken. As long as it works for you, then it's good. All right, listen, I just wanted to say thank you for letting me have this event with you guys. This has been a lot of fun. If there's any questions, you can always send an email, visit the website, but then also just make sure that when you are building a strategy, some of the things that we did talk about today can really help you. Make sure you look at price channels, and make sure that you look at maybe some of your actual movements as well. Great, I'm happy you guys enjoyed the event. This has been a pleasure. Thank you to NinjaTrader as well for organizing this. Look forward to doing this again with you guys maybe in the near future. All right, happy trading, and Central Trading Academy wishes you guys success. Jared?
Thanks, Max. I just want to give a special thank you to Max of Central Trading Academy for his great presentation today. Heads up, everyone in attendance here today will receive an on-demand recording of today's event. Please do keep an eye out for that email. NinjaTrader Ecosystem is pleased to sponsor these weekly vendor events as a value-added service for our clients. If you find some value in the events, we hope that you will attend them on a regular basis. A quick reminder that the information provided today was that of Central Trading Academy and not of NinjaTraders. All information was for educational purposes and should not be construed as trading advice. Again, we appreciate the time you spent with us today. Please enjoy the rest of your day. We hope to see you again in future webinars. Happy trading from all of us here at the NinjaTrader Ecosystem.